This is Lisa Miller and Associates, Florida Insurance Roundup, your podcast on the people, issues, and regulations shaping Florida's insurance market. Now, here's Lisa Miller.
Welcome, friends. The Florida Legislature ended its annual session on April 30 of this year, passing a residential property insurance bill, Senate Bill 76, and it was meant to cure a variety of ills in our state's homeowners insurance market. Senate Bill 76 makes some changes to how attorney's fees are awarded in claims disputes, but for many in the insurance industry, insurance agents, and even consumers I've spoken to, it's viewed as a watered-down bill, one that doesn't restore market stability, does not fully curb the enormous rate increases we're seeing, and it won't slow down what's going on at Citizens with its alarming growth. And it doesn't substantially slow the litany of lawsuits that come in every single day to insurance companies. As one of our guests on today's program summed it up so well, on the Senate floor on the final day of session, this bill achieves no more than 40% of what is needed and what was intended in the original Senate Bill 76. Joining us today on the Florida Insurance Roundup is State Senator Jeff Brandes, a Republican of Pinellas County, and he fought so hard with his colleagues for strict reform through this and a series of other bills this past session. He'll explain what the bill does and what his perspective is about what it doesn't do and the impacts, if any, positive or negative, including on what he has said repeatedly, Florida's real estate market. Welcome, Senator Brandes.
Great to be with you.
Thank you. And also joining us is John Henley. John, a Vice President and Head of Claims Shared Services at UPC, works a lot in the litigation arena, one of the largest writers of our homeowners insurance market in Florida, headquartered in beautiful downtown St. Pete. John previously served as UPC's litigation director and is a longtime claims attorney with a thorough understanding of what happens in insurance disputes. John, thank you for joining us.
Pleasure's all mine. Looking forward to it.
Thank you. So those that listen to our program and follow us regularly, they understand when I use the term topsy-turvy residential and commercial insurance market. We're seeing policy cancellations, non-renewals. 2 or 3 orders just came out over the past 60 days, almost 60,000 policies being non-renewed. We're seeing underwriting restrictions. A couple just came out as of this week where every renewal has to be underwritten, where certain counties won't be eligible for coverage. And of course, the double-digit rate increases that agents who are listening are feeling the anger of their customers who are calling their agencies and saying, what is going on? So if the senator will permit me, I'll call in Jeff and John. I'd like to talk about what this bill does and doesn't do, and what do you think will happen for some of the roofers and solicitors and plaintiff attorneys and those that are unscrupulous? We have many that are good, of course, but those that don't have the best intentions for consumers, what are they going to do to try to get around it? So I'd like to start with Senator Brandes, and maybe he share with us some of his commentary on the Senate floor. For those of you that didn't see it, we're going to put in our show notes the link so you can listen to his commentary as well as Senator Boyd, who sponsored the bill. So Senator Brandes, tell us what's on your mind this morning.
Well, I think the key is when the Senate originally passed out Senate Bill 76 and sent it to the House, it was a very strong piece of legislation. In fact, it would have, I think, really gone a long way to addressing a lot of the challenges Florida marketplaces sees. Specifically, it dealt with attorney's fees. It was a very strong, basically based on the Texas model of attorney's fees statute. It had a very strong provision as it relates to roofs. And allowing for actual cash value and even stated value of roofs, because we know that's one of the major problems we're seeing across the state of Florida right now is the rash of roof claims that's coming in. And frankly, insurers are responding as they have to by limiting coverage on certain types of roofs or not writing on certain types of roofs. Or ensuring that if they do write that property going forward, that the homeowner has to replace that roof before they're willing to write the property. Those were the really kind of key provisions of that. It had a number of other provisions in the bill, but at the end of the day, it was the 2 main drivers. The 2 things that we really needed was to deal with attorney's fees and to deal with roof issues, as well as a number of other medium to low-end issues that needed to be addressed in the Florida insurance law. And again, this bill was very strong. It left the Senate and went to the House, lingered for a couple of weeks, And when it came back, it was missing some very key provisions. One, it had a watered down attorney fee schedule. Two, it did not contain the fee multiplier provision that was so needed by the industry. And finally, it basically had removed all the provisions as relates to actual cash value or stated value on roofs. Those three provisions really were the meat of the bill. And at the end of the day, while we still signed on to the legislation, you kind of were left asking the old Wendy's commercial, where's the beef? Because it was missing a lot of what was necessary to be a comprehensive piece of legislation that would drive down rates over time.
Very great perspective. John, being the practitioner every day, listening to stakeholders from plaintiff lawyers, insurance lawyers, consumers, agents, you follow this legislation closely. What is your thoughts about what this bill doesn't do?
So I would agree with what Senator Brannis said on the floor when he said this gets about 40% of the job done. And the best thing about it, in my opinion, is two things. The attorney fee provision is a step in the right direction. Of course, it doesn't knock it out, but it's so much better than the current paradigm where in for a penny, in for a pound. They get 1 penny. And let's be serious. This is a very amorphous situation we're talking about when we talk about repairs to property. If you line 100 contractors up and ask them to do certain work, you're going to get 100 different prices. It's not going to be on the money every single time. And the problem with that is now, and until this bill is signed into law, is all you got to do is have some kid out of law school hang a shingle, have buddy up with a public adjuster. Public adjuster sends them a couple files. They file a lawsuit, and it's pretty easy to get 1 penny against the hated insurance company. Now they're able to ask for $350, $400, $500 an hour times whatever hours they had, and still request a multiplier on top of that. At least this does something to say, hey, look, you got to give us an idea of what the dispute is up front, which we have not had the benefit of in the past. They can just sue us. We adjust the claim, we think everything's fine, and then they sue us. They don't tell us what they're demanding, and we have to hunt and peck for months and months in litigation to try to even get there. All the while, they claim that work is necessitated by them, and they're claiming it as fees against us. So this allows for notice. I could not agree more with the senator. I wish it did, similar to Texas's House Bill 1774, and gave a 60 days notice like originally contemplated. But hey, I'll take the 10 days for now. It's better than nothing. And the fact that it essentially has, if you get 0 to less than 20% of the disputed amount, you don't get attorney's fees. That's great. At least give us some launching point to go from. And so, go ahead.
Jeff?
No, I was saying, I think the key is that, we need a provision in here. And I think hopefully that's what the 20% will do, is to ensure that everybody comes to the table and acts reasonably. Mm-hmm. With the one-way attorney fees prior to this law, what you would have had is people coming to the table and they had no incentive to be reasonable. In fact, they have an incentive not to be reasonable, because if they got 1 penny more, all their attorney's fees were paid for. And so it really put everybody kind of in an adversarial position to begin with. Whereas I think this piece of legislation, at least with the attorney's fees provisions, brings people to the table, hopefully to be a reasonable actors on both sides.
Very much so. And honestly, the second thing, the solicitation piece is great. It really is. Talk about, again, a step in the right direction. The notice of loss truncation with regard to all claims, not just windstorm claims, to 2 years instead of 3, with a third for the supplement, that's great as well. But what I'm truly excited about, and it may sound counterintuitive because it does put an onus and a burden on us as the carriers, I'm excited about the annual reporting requirement and the transparency that creates with carriers to the state about litigation figures, loss cost, adjusting cost, because I truly feel that message, when the state starts to get that information and they truly see behind the veil of how much money this industry, this litigation economy in Florida is taking from carriers and insureds ultimately, I think that it will be the kickstart to get the other 60% that we want done. I truly do.
Let me ask you this before you respond to that, Senator. We heard testimony or debate on the Senate floor where a certain senator would say that the one-way attorney fee is a misnomer. It's not true. There's no such thing. John, can you comment on that? Let's just once and for all put in the marketplace the Section 627.428 Florida statutes. We all use it colloquially and call it the one-way attorney fee statute. What is your perspective when someone says to you, John, that's just all hooey, that's not the case, it's not really the truth? Is it, John?
No, that's being intellectually dishonest. It truly is, because that's what the statute is. And it is the reason why, and credit to Commissioner Altmaier for compiling that data. It's the reason why, 8% of claims in the country originate from Florida, but almost 80%, over 76% total of overall litigation in the country from property claims comes from Florida. It's because no other state has that mechanism where one way, the insured can get their fees if they prevail. And prevailing means anything. A dime, a dollar, it doesn't matter. If they prevail and get a judgment in their favor for a penny, then their attorney gets their reasonable cost. Reasonable being a suspect word in this context, but that's what they get. So it is truly a one-way fee statute. It does not contemplate a carrier's right to entitlement to fees if we win. So we could literally be embroiled in years of litigation, win, and still be out of pocket hundreds of thousands of dollars for defending ourselves on a frivolous lawsuit.
Senator?
Well, I think he's exactly right. I mean, I think that once that statement by OIR was made and clearly shown, it completely changed the dynamics and the tone of our colleagues in the House. Because it's undefensible. You can't be 8% of the total U.S. market of claims and yet 76% of the lawsuits. That is completely unsustainable. And that's largely what's driving both the cost of insurance, but also the investors out of the market. They're really hesitant to invest in Florida market if all they believe that their investment's going to go do is go out to the trial bar in attorney's fees. And that's what we've seen historically happen.
So what happens, and I'll throw this to you, Senator, first. Let's just take us to January 2022. What's your perspective on what happens in the next 6 months, Senator?
Well, I think some of the provisions will immediately go into effect. Obviously, the non-solicitation and other pieces will go into effect fairly quickly. But the big challenge is for the insurers is it generally takes 12 to 24 months for this to kind of run all the way through their book, and so they're going to have to rewrite their policies. They're going to have to adjust some of the forms and take into account the new changes in law. But again, it takes time, and in the meantime, you're going to have you're likely going to have 2 hurricane seasons pass before the full effects of this legislation are felt. In the meantime, we have record high lumber prices, record high copper prices that are going to also play into loss adjustment expense for insurance companies. And these are, if, and God forbid, we get hit by a storm this year, the rate increases are still going to rise, are still going to come, largely because this bill, while it's something, isn't enough. Mm-hmm. And while we hope that it begins to curtail some of the excess litigation that we're seeing, and obviously the 2-year time frame is going to have a significant impact on a lot of the fraudulent claims that we were seeing coming in the third year, and frankly towards the end of the third year, as there was a rush to the courthouse steps in order to get your litigation filed prior to that term being up. Ultimately, it's going to take time, and in the meantime, Citizens will be most likely over 1 million policies in the next 2 years.
And that means for folks like you, John, you're hearing it here, that it's going to take this, a year to 2 years, which, of course, those listening to this podcast, specifically from the legislative arena, when we go back in January of 2022 session and we say we need additional reforms, these certain legislators may say, well, let's let this one chill for a while. Let's let this bill see if it's going to take effect. To which, what would you say, John, if you were standing on the Senate floor and you heard that kind of discussion, we should just wait?
Well, first thing, we are highly likely to see a deluge of litigation between now and the purported effective date of the legislation being July 1. Because think about it. If you are a lawyer, a first-party property plaintiff lawyer in Florida, do you want to file a lawsuit that requires you to have a reasonable demand because your fee entitlement is now predicated upon the percentage of your recovery as opposed to the disputed amount? Or you want to file that lawsuit you have in your back pocket when all you have to do is not provide any notice and win by a penny? My thought is the latter. And so we fear that there's going to be a significant rush to the courthouse over the next 2 months. Some of that we're already starting to see as an industry. So you have to take that into consideration. As the senator couldn't have said it any better. This takes time to flesh itself out, number one. Number two, we are dealing with a very creative plaintiff bar here in Florida. Let's not forget, it wasn't that long ago before Senate Bill 408 came out, I believe, dealing with sinkholes, that somehow the plaintiff bar got a bunch of judges to believe that structural damage should mean any damage to a structure. While grammatically asinine, that was truly believed. So we have to actually see this roll out and play itself out in a court system that has been historically lenient towards plaintiffs. So we are not going to see significant cooling and chilling of the environment that we're currently in. I suspect a flattening. I really do. I suspect a flattening as we see potential constitutionality challenges akin to the workers' comp fee reform that took place, and other things, the proposal for settlement challenges. But I do see a flattening, but it's not going to go as the Texas reform did, which essentially the original bill was meant to do, coming out of the Senate, and that's knock it out, really knock out the frivolity of the lawsuits coming in.
Yeah, I think we're the insurance industry has significant headwinds right now. One, you've got inflationary pressures in the lumber and building supply industry, and just supply pressures as far as labor goes that are affecting all of Florida, and that's going to be a major headwind probably for the next 2 or 3 years. That really has to be accounted for in rates. Two, you still have the roof problem that was unaddressed by this legislation, other than the change in time frame from 3 to 2 years. And that's going to continue to be a major issue that you're going to see ramifications for in policies. We're already starting to see insurance companies pulling away from the coast. And as they enter into the reinsurance cycle and seeking reinsurance, you're going to find many of them just don't have capacity or don't have the ability to acquire the appropriate insurance for the reinsurance for the amount of properties that they're writing or in the locations that they're writing. And so you've already begun to see companies pulling back or dumping policies into the marketplace simply because they have to. They don't have another choice because they can't raise additional capital.
So let's take this back to the consumers. Senator, you have shared with me, and I've talked to other members of the legislature, their phones are ringing. Agents are telling me their phones are ringing. Consumers are really rising up, and they're upset. And I know that all the legislative aides and agents that I speak with that have direct-to-consumer discussions are sharing the three main things that are causing rates go up, excessive litigation, contractor fraud. We use the term claims creep, meaning that, Hurricane Irma claims are still rolling in for the incentives that there are incentives to have those claims filed. So ultimately for consumers, John, and I'll throw this over to you, and you have several 100,000 policyholders, how do you communicate to those policyholders, this is the state of play in Florida, look no further than those people that are knocking on your door. Look no further than other. I think there's Barry Gilway with Citizens has identified 20 to 25 law firms that are posing almost 60 to 70% of all of our 100,000 lawsuits that are filed right now. John, how do we communicate that we're all in this together, and the spectator sport of filing lawsuits needs to tap down? And it's affecting the very homeowners who are recovering from COVID, trying to go back to work, and trying to keep their doors open. John?
Well, we do exactly that. We communicate it. We as an industry have historically, I don't believe, done a very good job of communicating with our customers, our insureds. You know, my teams say that our prime directive and our job is to protect UPC and its insureds, to protect them. And this type of door knocking, fraudulent conduct will buy you a steak to inspect your roof. Hey, you got one damaged shingle. Who knows when it's from? But we'll get you a free roof. You know, all that nonsense that we see consistently is driving rates to the point to where, anecdotally, I think I've told you before, Lisa, that I live right here in St. Pete. I live in South St. Pete, and I love it here in South St. Pete. But I pay 3 times more for a house that's 3 times smaller than one of my best friends who lives in Atlanta, Georgia. Why is that? It's not because I've got the Cadillac of coverage on everything in my home. It's because of the claims and litigation activity that is driven by these bad actors. It truly is.
Jeff, I want to ask you this question. A certain senator on the floor of the Senate said this is a fabricated crisis, that insurance companies are cooking their books, that this is just the sky is falling. What would you say to that senator if he was on the other end of this discussion that we're having today?
Well, I think it's important to point out that senator also is a trial attorney. Mm-hmm. And so, I mean, I think he's sharing his insider perspective as being a trial attorney as much as he is sharing his senatorial perspective and trying to protect the constituents that he serves. Mm-hmm. This isn't a made up issue. There's a real problem in Florida that really shows that the insurance market is the Achilles heel of the state. And we saw this, in Brighart Waters when flood insurance rates went through the roof. And I had people calling my office saying, where do I send my keys? Because I can't pay my flood insurance premium. We're not far away from that happening in the state of Florida with property insurance. And unless we get our hands around this problem, we're going to have real challenges going forward. And we're talking about seniors on fixed incomes. We're talking about young families that are just starting out. And frankly, everybody in between that is paying essentially a hidden tax on property insurance that they're paying through their insurer to the trial bar. And that's what's causing all of these problems. You talk to insurance companies and what they want to do is service their clients, but they have to have a guiding set of principles, and the math has to work in order to do that. And right now, the math isn't working.
In fact, I've had one certain CEO always remind me there's only 100 pennies in a dollar, and there's just only so many ways that it can be sliced and diced. And I think what the both of you are saying is that the time will tell how that slice and dicing of that dollar will occur. So, John, having heard the senator, you're listening to the marketplace. What are your thoughts over the next 6 months or a year, and what can we learn, and how do we deal with this new law, with this watered-down bill to try to make lemonade out of these lemons?
Well, piggybacking on what the senator was saying about the fabricated crisis that's being called by some people who conveniently seem to benefit from it. What I would say is that, as we were talking about earlier, this is what makes me so excited about the reporting requirements. And the people on the other side that would say, oh, it's fabricated, to hear an industry professional like myself say that I'm excited about transparency. I want the world to see this. Mm-hmm. We want to, and it's not every litigation claim to where we can hide anything else. This is on every single claim. Every claim now, we get to share this information with the state as public record. So you know what? Here, look at it. To the extent that you think it's a fabricated crisis, then look at the data. So I'm very excited about that. That's going to help us in our messaging to our customers. It's going to help us in our messaging to the rest of the state to show that this is not us. This is not us trying to be bad actors, the big bad insurance company. We want to take care of our customers. We pay out millions upon millions of dollars every single year to our customers for covered losses that happen because of fortuity. Things that just happen. It's a shame. It's awful. It's terrible that it happens, but you know what? We're here to help protect your largest asset. And this bill helps us in that regard. Is there more work to do? You're damn straight there is.
Thank you, John.
We're very happy, though, that this is being done, and we want to thank the senator for his good work in helping us do this.
Thank you, John. And Jeff, we'll let you close us out.
Well, I always use the growth of citizens or the shrinking of citizens as a barometer for the overall health of the marketplace. And I know that when we started session just a couple months ago, Citizens was growing at 3,000 policies a week. It is now growing at about 5,500 policies a week. And that is putting it on a trajectory to be well over 800,000 policies by the end of the year. We have to get this industry, this whole property insurance situation under control. We are on this incredibly unsustainable trajectory with rates that, if we had done nothing this year, would likely have doubled or more in the next 2 or 3 years. This is one of the biggest challenges the state faces. It's one of the most important issues the state faces because, frankly, it affects every person, everyone, whether they're renting or owning or in a condo, pays for insurance. And as it stands today, Florida is one of the outliers in the country for the cost of property insurance. We have storms. We're always going to have storms in Florida. We need a robust insurance market that is competitive, that is aggressive, and that is fair in how it treats people. The legislature has to work together with the industry in order to create that. And this legislation, while a baby step in the right direction, I think begins a broader conversation that ultimately is going to lead to reforms in Citizens because they're desperately in need of reforms, and further reforms in the property insurance market in Florida. We have begun to address the problem, but there is a lot more work to be done.
And that was State Senator Jeff Brandes, Republican from Pinellas County, who joined us today on the Florida Insurance Roundup. And we have John Henley, Vice President and Head of Claims Shared Services at UPC in beautiful St. Pete. I want to thank these guests, and you can tell from our conversation today and from others that we've had recently, whether I've chatted with you on the phone or in other ways, that this reform passed may have modest impacts on 2 of the foundations, or some even say 1.5, but that we have to continue to work to make insurance available and affordable. And Senate Bill 76, takes a passing blow at 4 major factors: excessive litigation, contractor fraud, what I'll call claims creep, from hurricanes where the hurricane claims never end. And of course, it takes a glancing blow at the full cost of reinsurance as those costs rise. So we'll be watching and reporting back on the impacts of this bill in the next 12 to 18 months. And I'm sure I'll hear from many of you that listen to these podcasts regularly of what its impacts are, and what I call in the actual field when consumers are dealing with this every day. So in our podcast show notes, we'll have a link to various reports and information. We'll provide links to some of the debate on the House and Senate floor that you can hear the various members talk about what this bill does or doesn't do. And we invite you to like our podcast and to share it with your colleagues and your friends on your own social media platforms. And of course, as we always say, we want to hear from you. You can call us here at the Florida Insurance Roundup by dialing 850-388-8002. That's 850-388-8002. Or send me an email, Lisa Miller, all one word, at lisamillerassociates.com. Thank you for being a part of this, to our great listeners, to our great guests. And remember, we have a passion for public policy and client success in our firm. And I know you, for all your policyholders, and the Senator for his constituents as well. So until next time, stay safe, and thanks for joining us today.
This has been Lisa Miller and Associates Florida Insurance Roundup, your podcast on the people, issues, and regulations shaping Florida's insurance market. For more information on today's program, please visit us on the web at www.lisamillerassociates.com.